The Fed raised rates, but yet the average 30-year fixed went down? How is that possible? We're going to talk about that next. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates, and we always start with those interest rates. So the average 30-year fixed down for the fifth straight week, down to 6.31%. We saw the high 5 weeks ago there at 7.08. So now we're into kind of that low sixes mark. We've definitely seen the trend to move down. If you took a look at my video last week, and I'll link up above, I talked about a double whammy this week. We are going to see the CPI number, Consumer Price Index, otherwise known as the inflation gauge. That information was going to come out along with the Fed meeting. And guess what? That CPI number inflation was actually down. So it came in underneath what the expectation was. That was very good for interest rates. That is why we've seen that fifth straight week of decline. Now, the Fed, on the other hand, they raised interest rates. They raised their Fed funds rate, not the average 30-year fix, their Fed funds rate. Now, this was expected, which is why the average 30-year fixed has continued to come down. So what will our trend be moving forward? Now, likely the Fed has kind of given us their playbook that they're going to continue to move their Fed funds rate up by a quarter for the next few meetings going into 23. That is now more expected and more probable than ever. Likely they're not going to see a lot of data that's going to change their mind on that. So one thing I will share with what, kind of in the Q&A session with the Fed that I took away is that they definitely need affordability up. They need people to be able to afford the homes. They need, inflation to come down so people can afford groceries, gas, everything, right? That is very much known. So they could stay on those interest rates and keep stepping up their Fed funds rate and potentially, kind of keep rates at this lower or at this level before they go lower longer. So that is they were very adamant about that as one of my summary points that I could take away. So as we look forward, as we are projecting into 2023, where do we see housing prices? Where do we see mortgage rates? Where do we see rental rates? Well, let's start about renting, right? So rental rates, 10.6% annualized, according to the National Association of Realtors. We're going to likely see high single digits in 2023 of rental rates continue to go higher. Now, where do we see mortgage rates? Well, mortgage rates have likely already peaked. I've mentioned that before. We're going to likely see a slow decline after the Fed is starting to step away, or after we see that inflation start to come down. That is really where we're going to see that reprieve in mortgage rates. So I've done videos on that topic as well. Now, let's talk about housing. We have very, very low inventory right now. Making this video in December, inventory around 1.3 million across the country. A balanced market's probably 2 to 2.5 million in inventory. So almost double of what we have today. Now, in the Chicagoland market, I mean, my goodness, I'm, wearing a turtleneck right now. It is cold. There's not a lot of sellers that want to put their house on the market in the middle of winter because there's not a lot of buyers that want to go out there in minus 10 degrees and go around and see houses. So, our market, our metro market is very cold, and we are obviously a very large market, right? So, we'll definitely see some additional inventory come spring into summer. What they're projecting, or what I've seen, is that we could see, that 1.8, 1.9 in terms of million, in terms of inventory, but still not all the way to a totally balanced market. So I'll continue to keep you updated. Let me know what questions you have. You're going into 2023. Right now is a really good time because we haven't seen all those buyers step back into the market with all that additional competition. So that's been good news for those that are out there. They're still feeling like they can get a good deal without having multiple offers across the board like we've seen in, kind of pandemic era 2020, 2021 summer market. So my name is Ryan Skaggs. If you've made it this far, click that like button, click that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Thanks so much, stay safe, and we'll see each other again very, very soon.